Need and importance of management accounting. Increase efficiency. So to know about the profit situation of business, we have financial accounting, and to control the cost, we have cost accounting. Then what is the use of management accounting, and why management accounting is needed? So the business motive is not only earning profit. The motive of business is to expand its horizon. So to increase the efficiency of business, we need to take certain strategic decision, and these strategic decision we can take from management accounting only. Now the second point is proper planning. Yes, for the growth of business we require proper planning, and this proper planning, management accounting helps in proper planning. Measurement of performance. In financial accounting, we can easily track down the profitability of business, and in management accounting we can measure the performance of business in different quarters or different years, and on the basis of that we can take decision. Maximizing profitability. How to maximize the profit? Such kind of strategies we can easily draw in management accounting. Improve services to customers. Improve services to customers. After taking the feedback of customers, we can improve the services, and this work we can easily done in management accounting. Effective management control. For effective management control we need a proper system, and that proper system we can easily deal with management accounting. Now the limitation of management accounting. Based on accounting information, this is the biggest limitation of management accounting. Management accounting cannot walk a step if no accounting information available from financial accounting, because all the work in management accounting based on financial accounting. That's why there is a common saying, when financial accounting ends, management accounting starts. Now the second one is lack of knowledge. Okay, this limitation can be overlooked by a over period of time. Now initiate intuitive decisions. Sometimes such kind of problem happen with management accounting. Not an alternative to administration. Top heavy structure. Yes, this can be a limitation, but in a big organization we need such kind of structure. Evaluating stage management accounting. Still struggling to improve, because there is no clear cut guidelines for taking decision, and every company is taking decision as per their need and demand. Personal biasness. Yes, personal biasness can be possible. Psychological resistance is again the limitation of management accounting. Now before discussing the accounting standards, let's discuss the another branches of accounting. As I already discussed about three branches of accounting: financial accounting, cost accounting, and management accounting. So let's discuss some other branches of accounting also. There is another branch of accounting called auditing. Auditor inspect and certified the accounts for accuracy. Internal audit by company employee also performed, but the external audit done by a person having the degree of chartered accountant. Tax accounting, preparing and uh, filling of tax returns, compliance of law, tax report preparation and all, reduction of tax in legal ways, verification, consideration, different aspect of tax. Fund accounting, keeping record of fund of NPOs, separate funds, maintaining for separate works for assurance of uses. Government accounting, keeping record for central and state government for allocation and utilization of various budget to ensure proper uses. And forensic accounting, this is related to calculate damage or setting dispute in legal matters, investigation carried out, also called legal accounting. And accounting and evaluation of a third party business and property maintaining under the care of another person. So now let's discuss the accounting standards. And accounting standards may be regarded as a sort of law, a guide to action, a settled ground or basis of conduct or practice. Accounting standards can be termed as synonyms to procedures, concept, and rules. According to section 211 3C, accounting standard means the accounting standard of accounting recommended by Institute of Chartered Accountant of India, constitute under Chartered Accountant Act 1949, as may be prescribed by central government in consulting with the National Advisory Committee on Accounting Standards established under subsection 1 of section 210A. So this is all about accounting, meaning of accounting standards. Now let's discuss IAS, Indian Accounting Standards. So there are number of accounting standards. We'll discuss one by one. So if we talk about AS1, AS1 is related to disclosure of accounting policies. We have AS2, AS2 valuation of inventories, AS3 related to cash flow statement. In cash flow statement, the inflow situation and outflow situation of fund cash need to manage. We have AS4. In AS4, contingencies and event occurring after balance sheet date. AS5, net profit or net loss for the period or prior period items. Now we have AS6 related to depreciation accounting. Again we have accounting standard 7 related to construction contract. Now we have AS8, it's now withdrawn, accounting for research and development. It's replaced by AS26. Now we have AS9. AS9 basically related to revenue recognition. Now another we have AS10, accounting standard 10, accounting for fixed assets. Next we have AS11, the effect of changes in foreign exchange rate. Another we have AS12. AS12 accounting for government grants. After that, we'll talk about AS13. The AS13 is related to accounting for investment. Now, AS14, we have the accounting standard AS14. This AS14 is related to accounting for amalgamations. Next, we have AS15. AS15 is basically dealing with employee benefits. After AS15, we have AS16. AS16 basically related to borrowing cost. After AS16, we have AS14. AS14 is related to segment reporting. Now, after AS17, we have accounting standard 18. This accounting standard 18 is related to related party disclosure. Now, we have AS19. AS19 is related to lease. Now we have AS20. AS20 basically related to earning per share. After AS20, we have AS21. AS21 is related to consolidated financial statements. After AS21, we have AS22. AS22 is related to accounting for taxes on income. Then AS23. AS23 is related to accounting for investment in associate in consolidate financial statement. After AS23, we have AS24. Discontinue basically this is related to discontinuing operations. After AS24, we have AS25, interim financial reporting. Now, moving to AS26, this accounting standard is related to intangible assets. After that, AS27. AS27 is related to financial reporting of interest in joint venture. Then AS28. AS28 is related to impairment of assets. Then AS29. This AS29 basically related to provisions, contingency, liabilities and contingent assets. More accounting standards are under finalizing and some accounting standards are under revision. Now let's discuss some important accounting standards. Let's talk about AS2. Basically, AS2 is related to valuation of inventory. AS9 is related to revenue recognition. AS17 is related to segment reporting. AS18 is related to related party disclosure. Now, AS2 related to valuation of inventory. Inventory are defined as an assets held for sale in ordinary course of business in the process of production for such sale of or in the form of material or supplies to be consumed in the production process or in the regarding services. The standard specified that inventories should be value at the lower of cost or net realizable value. The cost of inventory means the historical cost and comprises all cost of purchases, cost of conversion, other costs incurred to bring the inventory to their personal location and condition. The following costs are explained from the cost of inventories and are treated as expenses of the period in which they are incurred. Abnormal account of wastage material, labor or other production cost, storage cost, administrative overhead, selling and distributing cost. Formula for valuation of inventory: specific identification cost, FIFO, first in first out method, LIFO, last in first out method, weighted average method. Now the summary is the standard specifies that the following disclosures should be made in the financial statement. The accounting policy adopted in measuring inventory, the total carrying amount of inventory and its classification, appropriation of the enterprise. Now AS9 revenue recognition. The standard deals with the basis of recognition of revenue in the statement of profit and loss of an enterprise. It lays down the conditions to recognize revenue by sale of goods, regarding of services, resources, yielding interest, royalties and dividends. Revenue should be recognized for the sale of goods or services only when the collection is reasonably assured and the property in goods is transferred from seller to buyer. There is no uncertainty regarding the amount of consideration that will be realized from sale to goods. Now AS17 segment reporting. The objective of the standard is to establish principle for reporting financial information about the different type of product and services which an enterprise produce and the different geographical area in which it operates. A business segment or geographical segment should be identified as a reportable segment if its revenue from sales to external customer and from transactions with other segment is 10% or more of the total revenue, or its segment result whether profit or loss is 10% or more of the combined result of all segment in profit, or the combined result of all segment in loss which is greater in absolute amount, or its segment assets are 10% or more of the total assets of all segment. AS18 related party disclosure. This standard is applied in reporting related party relationship and transaction between a reporting enterprise and its related parties enterprise that directly or indirectly control and reporting enterprises, associate or joint venture of the reporting enterprise and the investing party. There is these associates or joint ventures, individual owing directly or indirectly an interest, the voting power of the reporting enterprise that gives the control Key management, personal and relatives of the such personal enterprise over with any person described is able to exercise significant influence. Thank you. Thank you so much.